Afternoon, everybody. Welcome to 12-Minute Trading. My name is Doc Severson. I'm joined here by Dave Lukas. Today is Monday, the 22nd of December. This is going to be our last live stream for the year, and it's been a heck of a year so far, and it looks like we are ending the year on a little bit of a bang here as maybe it's Santa coming in. So, Dave, what are you seeing out there? Is this the breakout that we've been waiting for?
Yeah, I think it started last week on Friday. And so now we're seeing the continuation. This week's a weird week, right? Because we got the next 2 weeks they both kind of trade weird because the Wednesday's a half day, Friday's a full day, and the holiday is on Thursday. So you have Monday, Tuesday, and then traders are out, basically. It's all algos from there. Nobody's going to be around Friday. And so you've got low volume weeks are prone to bigger moves. So today's kind of the real trade, maybe tomorrow some, and then it's all algos taking over from there. So I you can see some volatility because the algos nowadays, the way they're programmed in, whether you agree with it or not, but they're literally programmed to watch Twitter. A headline comes across on Twitter. That's what happened to Oracle last week, and even the first time. Like this thing hit Twitter about Oracle, and then all the algos started selling off. And they had pre-programmed sells to like 7% because that's where everything went to. Oracle, all the other AI stocks, all went to selling off 7% and stopped. Right. So, um, I don't think there's going to be that much. I think this is going to continue. Remember, the Santa Claus rally period are the last 5 trading days of the year and the first few of the next year. So we're actually not in that period yet. We get into that period like Friday-ish. So it's a good start to the week. Kind of what we've been saying to expect. I think we could tag 7,000 on the S&P by the middle to end of next week. So yeah, we'll just have to see what it gives us. But for us, it's green light, and we're kind of hitting it hard for the next 2 weeks here with our trading strategies.
I'm going to bring up the S&P just to give a little bit of context here for what's going on.
Mm.
We are seeing very similar to the end of 2017 here, where we just went through a rocket ship, and I wonder if we're going to have the same thing happen in January that happened back then. So we had a very strong 2017, and then as we got down into crazy exhaustion here at the end of 2017, what happened was we got into January and it just took off.
Yeah.
One final shot to the upside.
Yep.
And so this is that epic move that we had, and we're in a very similar condition here.
Cool.
Now, this is not predicting that we're going to see that blast off into January, but it certainly could happen. We could have
I think we're set up
a
for it.
little bit of an
If
echo.
you Yeah, sorry. If you could do a single chart and throw the Bollinger Bands on. We've got a
Okay.
very unique thing setting up, and these happen from time to time, but this one is very pronounced. So I want to share that. So throw it up, yeah, throw it up with the energies and the Bollinger Bands. Kind of
Okay.
my typical
Yeah, I
chart
don't
setup.
have the energies on here, but that's
That's all right.
that'll work.
Okay, so see on the daily chart there what's happening? We've got a squeeze setting up on the Bollinger Bands. And you can see we're starting to get to that upper Bollinger Band. And so squeeze, you can think of like, Doc will say this example too, like putting water in your hands and like squeezing them real fast. Where does the water go? Comes squirting out of there, right? And so we've got, if you had the energies up, the energies are showing about a 58 on the daily chart, which are very charged. That's full charge. Anywhere around 60 or above, that's fully charged. And then you've got a weekly chart that's literally at like 62 and starting to go higher. So I'm thinking that this Bollinger Band squeeze plays out over the next week, and it's what pops things to 7,000, and then that weekly chart kicks in and continues it into January. And again, this will go until that I think that weekly chart gets to exhaustion, and then you'll be in that condition where you have a weekly chart exhaustion and a monthly chart exhaustion, and that's where maybe we get the correction for the year, the biggest one of the year, maybe 8 to 10%, or we go sideways for a very long time. There doesn't have to be a correction, but it'll be very hard for the market to just keep going when we're in that weekly and monthly exhaustion together. So,
Yeah, so this is what Dave is saying is that we have a tremendous amount of potential for this weekly chart to explode. I briefly looked at John Carter's squeeze on there, which is not showing yet, so we don't have the Keltners inside of the Bollingers just yet. But it's not like the market's going to hold off on that. When there's this much potential for movement, even though the larger time frame, the monthly chart, is in exhaustion, this may give us this shot, that squeeze that comes out of a consolidation like this. I mean, basically, we've gone nowhere since the latter or around the mid of October. This has been going
Yep.
nowhere since the middle of October. And so what we typically see is range expansion leads to range contraction, which leads to range expansion again. Now, this certainly it does have the potential to go to the downside. We don't want to discount that. But
Yeah.
with the trend that we have, there's so much momentum to the upside. The seasonality that Dave talks about is also around this time of year. So this is a high probability trade. One of the trades that I set up this morning in the trading room was what I call a lottery trade. And it's one of these where we set up an out of the money vertical spread, which is kind of it's a lottery. It's a cheap trade to put on with an upside target, which is over 7,000, and it'll pay off 5 to 1 if it hits. So it's one of these where it's like, it's the same thing as a lottery in that, you pay your money and you don't really necessarily care about whether or not, if you lose, it's okay because it's so cheap. And that's what we typically will play during these conditions where we have a
Periods.
hugely charged up chart, right? And nobody's really talking about the potential for the trend right now because we've just come off a correction,
Yep.
yet another correction. In fact, we had a correction and then a pullback right off of that, just when it looked like it was going to break out. So nobody is anticipating. Everybody's like, "Whoa, this is never going to break out." And this is typically when we start to see those types of moves when nobody
Yeah, and
expects it.
I'm looking at the charts on this, and I'm seeing like I just had one of my trades close out. You probably heard the noise, but the like it yeah, it's just I mean, after going nowhere for this long, the pent up energy, the pent up like animal spirits even, right, are just I think it's too much to bear. Like you think psychology of things, right? I just think with the squeeze, like this thing's gonna, these guys want to get a good window dressing for the end of the year. I think that is what propels this thing higher over the next week. We're only 120 points or so from 7,000 on the cash index. So, I really think we're going to see that, kind of explode higher into the end of the year and see that. I think there's and then I think that continues into January until we get that weakness. But next year too. I mean, we've talked about this before, but next year is an election year. They're going to pull out all the stops to make things look good. You saw Trump did a speech last week, and rightfully so, we're giving military bonuses out. So that's more money into the economy. And then he's mentioned about checks from the tariffs, so that's more money into the economy in people's pockets. And again, that supposedly, and we'll see, because Scott Bessent's been out there kind of shouting from the rooftops that everybody's going to get a lot bigger refunds this year, and people's withholdings are going to change, so they have more money in their pocket. Then you have a wealth effect, people spend more, and that just kind of fuels things. To me, it's set up, you know, for a pretty solid year in 2026. Um, and like I said, when we get to that exhaustion on the weekly and the monthly, we may get corrected or just sideways. We've seen that before. Remember, was it a couple of years ago where we did nothing but go sideways, like from February to May, and then we had the massive breakout at in June. What year was that? Because you and I were sitting there going, this thing doesn't want to go anywhere, right? For like several months. I think it was a couple of years ago. Maybe after the what was the bank that failed out west?
No, that
Um,
was 2023. So
yeah.
we
Yep. A couple of
started
years ago.
the price started to come out of the bear of 22, and we're like, okay, this is good, and then it just sat
Yep.
there and went nowhere. And
Yep.
then it finally broke out, and then right when everybody was saying, okay, all green light, all guns, energized, and it's like we went into that full correction once
Yep.
again into October. That was crazy.
Yep.
But
So
that
that,
that spawned a multi-year rally right from there.
yeah, exactly. And so, like, that's what I'm saying. I mean, we don't have to correct, but we're going to be in a position where it's going to be tough for the market to keep trending higher, at least for, I'd say, 6 to 8 weeks somewhere here. So for now, though, get it because I think this next week or so is going to be great for positive trading.
Yeah, I hope so. Let us know if there's any questions or if there's any symbols that you want us to take a look at while we're talking here today. To my knowledge, we are not going to be running a session next Monday. So in between
Correct.
Christmas and New Year's,
Yep.
we are off. So the next time that we will see you guys, it's going to be in January. So let
Yep.
us know if there's anything you want to take a look at. We
Yep.
are, yeah,
I
go
was
ahead.
going to say the one thing that you should look at today, gold is breaking out again. Um, GLD's having a banner day. And then Bitcoin and crypto is just every day it spikes to start the day and then gets sold off. Like it's something to watch. It just cannot get over the hump. But yeah, gold's up 8, 9 bucks today. GLD, that's a big move for the GLD.
Look at this move on silver. I mean, this is insane.
Mm-hmm. Silver's finally catching up.
Yeah, silver's been leading gold over the past month or so.
Yep.
And it's I've got covered calls on it, and now I regret those because I won't. I just keep rolling them out, and they just keep getting run over. So fortunately, they're fully hedged when you do that. But
Yeah. But yeah, if you look at it, it's gold is the weekly chart's kind of carrying the day on this again. Now it's getting close to being exhausted on GLD, but it's still got a little bit further to go. So I think gold will run into the end of the year.
mhm.
And then yeah, see it's down to 39. So I think we got a little more ways to go there. And then I keep watching the IBITs of the world because I'm trying to see are they going to base and spike higher, or do we just keep in this pattern of bear flag, drop lower, bear flag, drop lower? And that's the one that you know, love to pick up some more if we, get down lower, or if we show a good turnaround on this thing.
This is what I'm seeing on IBIT, which is
Mm,
Bitcoin. This is right now very similar to what we went through in the spring for different conditions. Now, what was different about this is that everybody sold off this amount. And then as everybody took off from here, then, Bitcoin was a recipient of that. But this is one where everything sold off temporarily around the 10th of October when Powell said that there may not be additional cuts. And this was Bitcoin took it right on the chin. And so this could be a bear flag setting up for the next leg down. This could also be just a consolidation before setting up the next lower high before rolling over. Or what I hope is that we're going to see a repeat of what we saw back in the spring. Don't know
mm,
at this point just yet, but I don't like how, what Dave says was like every day there's so many topping moves here. Like we'll start off
mm.
strong and demand comes in, and then the day is long, and then all of a sudden the Bears once again, uh, win the day.
Yeah,
And
well, I mean, IBIT was up over a buck earlier today. It's only up 13 cents now. That's giving back a lot,
yeah, it is.
especially when you have a positive market like we're seeing today.
Yeah. So Bitcoin is running counter to the rest of the market, and that's we do have a death cross. That is that's a trailing signal. That's something that only works in the rear view because we've seen so many of these death crosses before that have not played out. So something to keep in mind. But yeah, I
The
hope
beast.
this. Like what I'm hoping for on Bitcoin is I'm hoping for just a flush, an
Mm,
undercut of the previous low and a flush, and just to rip the band-aid off, and then a big squeeze after that.
Hmm.
So this is what's going to separate, the wheat from the chaff here in the meantime, because this is like death by a thousand cuts the way it's working right now.
Well, the other thing is too, we talk about this a lot. This is a contrarian thing, right? So if the rest of the market is going higher and Bitcoin is not or going down, be fearful when others are greedy, greedy when others are fearful. So it's hard to chase, it's not hard, but chasing a market at its top, is going to work until it doesn't, right? And it's like a game of musical chairs. But if you've got, something and that's why I keep saying, I want to see if this bases or if it flags and goes a drop lower, because once I got a clear signal that I think Bitcoin is basing and finding that real good level of support, great time to accumulate at that because, from a contrarian standpoint, you want to buy it when it's lower. And so that's, the old buy low, sell high adage, right? So, a lot of things are high. So it's hard to say, okay, I'm buying at the highs on all these other players. But Bitcoin buying at the lows, right? It's always funny to me where people are chasing Bitcoin when it's at 130K, but then it drops to 80 and nobody wants to buy it. Like,
Well,
what? Seems like the time you want to buy it.
crypto in particular has some of the least sophisticated investors that are out there.
Yeah.
And I know this, from a fact because I got involved with this back in 2018 when
Hmm.
there was nobody out there, and so you'd get some kid that basically had just bought a technical analysis class, and next thing you know, he's teaching out in the market like, hey, let me show you the
Right.
relative strength index. Ooh, wow, this is a new tool, and so crypto is still a very immature retail market. And so it's good that it's been institutionalized over the course of the last year, especially
Hmm.
through IBIT is probably the biggest factor towards this. But right now, this is a concern. As long as this stays in this flag, this is a concern. What I'd like to see again is just a rip the band-aid off undercut. And it's going to be painful, but this will really tell us whether or not this is destined for lower prices, or this is the time to perhaps, if we undercut and if we rebound from there, that's the time to be selling puts or just going along on IBIT or Bitcoin, however you want to do it.
Yeah, good point on that. But yeah, think contrarian, guys, when you've got markets like this that are, just every day at all-time highs and stuff, there's strategies you can, we've got like our campaign strategies and I've got my what I affectionately call my 50/50 that I do a lot of and things like that. But also look for those contrarian plays. What are those things you could be accumulating while everything else is, going bonkers? What is it that's getting really beat up that you can accumulate at good prices? So keep that in mind.
Yeah, I mean, Dave brings up a great point. Like one of the things that we've stopped doing is chasing after some of the bigger names just because
Mhm.
they're so extended up here. Now, they are
Yeah.
doing a high level base, which means that there might be a trade in there, but it's probably not going to be one of these big, the recent Google breakout is a relatively rare thing at this high base.
Mhm.
So you get some grinding moves, which are those are okay, but you're not going to be carrying that much value, especially as expensive as some of these things are. So we're
Yeah.
looking for other candidates that as we get into a more mature bull market like this, we're
Yeah.
looking for candidates that have been basically beat up for the last several years that are basing and are ready to join the party, even though it may
Mm.
be somewhat late.
Yeah, what are those forgotten stocks that have a good business that continue to grow and throw off cash and, you know, accumulate clientele and, that sort of thing. What are those out there? We've said a few of them. Like, I mean, we mentioned, I think last week we mentioned like Zoom. Zoom is one of those, right? Sitting out there that just hasn't done anything for a very long time, but it's starting to creep higher, starting to creep, looking at like it's going to break through to its next level. Like these things are out there. And again, those are the times to think about, which ones those are. Not chase, but see how it's starting to curve up higher on those bigger charts. There's
There's
just
so much more risk in buying something up here at $500 a share, versus No, but he's talking about Zoom down here at 89, 90 bucks a share.
Exactly.
Another one that we talked about today was Lyft.
Mm.
Lyft is setting up, has been really working this thing since the bear market in 2022 has been down here, depressed between $10 and $20, unable to get anywhere. But some of these, if you look at some of the earnings figures, are starting to increase.
Hmm.
Right, estimated. They're starting to beat earnings numbers. They're finding a way to become more profitable, and maybe they're going to be driving the robo taxi thing as well too. So,
Hmm.
right now you got to be smarter about what you chase after. It's easy to go after and say, well, let's go after Nvidia. Um, but I mean, how much, even though this is setting up a late stage base, it's also the analogy that I use is you've got a 500-pound weight, which is being supported by a very long piece of metal conduit, right?
Hmm.
So is it possible for that weight to be supported by a long length of metal conduit? Yes, but you don't want to go off by more than a degree or so in either direction. Otherwise, this thing
Yeah,
will
until you get
kink and fold, and
a nasty wind comes along.
yeah, and then it's gonna, you know, the whole thing will come crashing down. So this is the same thing that we're seeing in the markets right now, is that you don't want to be chasing these late stage bases at these levels. You can do that for a trade if you want to, and that's the great thing about options is,
Yep.
instead of trying to buy the shares or sell puts against this, you can just do a quick, in and out trade, whether it's through a spread, and you don't have to risk a whole lot. But it's a trade and not an investment. Whereas, the ones that we're talking about before, like with Zoom and Lyft and Open Door and things like that, those are investments that we're trying to curate, going forward into, a position that might carry some value for a couple of years before, the headwinds come.
Hmm.
Let's see if there's any other questions here. We're getting near the end of our
Yeah,
time.
last one of the year, guys. So ask. Let's see if I see anything else from my dashboard today. Um, Tesla is starting to move. It's kind of based for a while, so you might want to take a look at put that on your list. The last few days have been really good, but it's still got a lot of energy pent up. And its weekly is just really getting going. So, one way to play Tesla that I like and I love to sell like spreads against is TSLL. Something to think about there. Or just you can just buy TSLL. It's cheap. It's like 23 bucks a share. And you can just sell covered calls on it if you want, or just sell puts against it, either way. But Tesla has a nice trend right now. So
And this is
when we
what
talk
Dave
about
is
those,
looking at. The TSLL doesn't keep up with Tesla in terms of price, but you've got a 10% yield
yep.
uh,
So
that's paid
pays
quarterly.
quarterly. But so if you get put the stock, great. You can get a 10% yield plus sell calls on it, boost the yield even more. So it's a nice way to play it.
One of the things that I've done this year is I've started to build a position in SPYI, which
Hmm.
is very similar. So, yeah, when these things go into correction, they get nailed really hard, and they don't really keep up on the upside, but they do
Yep.
pay a very nice dividend. So almost 12% dividend on this. So I'm not going to be earning a whole ton of money on capital gains on this, but it smooths out the portfolio very nicely, just in terms of
Another
the
one, if you
dividend.
have a little bit more risk tolerance, is XDTE that pays weekly, and it's paying 25 to 30%.
Yeah, which
So I.
is so that's an S&P derivative.
Hmm.
Yeah,
Yeah, it basically they're selling covered calls on the S&P every day.
yeah, and this is why you're getting paid all that, because it does not keep up at all
Nope.
with the
So I said
chart. So
you have to have more risk tolerance. But for a while it's hung in that 40 to 44 range, and that's kind of what I watch. Like, does it stay in that range? See, the yield's nice, pays every week. So for income, it's great if that's what you're looking for. You can't sell options on it or anything like that. It's just they just change are terrible.
Right.
But
This actually looks worse than it really is because this is compressed in between,
mhm.
53 and 40-ish, 53
Yep.
and 39. So it does really stay in a pretty fairly tight range. But this is what we're saying is like this whole rally that happened from April really didn't get you any capital gains. You're
No,
eating
you
all
wouldn't
of
have
that.
gotten any capital gains.
They're
You
using all
just
those capital gains to pay the dividend. So,
exactly.
but
Yep.
they're happy with giving you the risk when it happens to the downside.
Oh yeah, that's why you have to like for example, I keep shares of this just, if I don't have them working for me, I buy shares and just keep it in here and collect the dividend. But that's as long as I see the market, having this uptrend. The minute like we get to that weekly exhaustion and that monthly exhaustion time frame, I'm selling out of all my shares in this.
Yep.
I don't want to I don't want to hold it. Like you mentioned SPY I, there's another one QQQI. That's just like SPY I pays a little bit more. I think it's like 12 to 13% or so. That's another good one as well. Those ones definitely are safer in the sense that they will give you some gains and stuff. You can see that on the charts there.
Okay.
So,
Well, guys, it's been real. It's been a great year, and I'd like to thank you guys for joining us on the journey this year. Remember the all the troubles this spring that we had as we got into the tariff tantrum, and then we rocketed out of those, and then we've been pretty much sideways now for a couple of months, and
yep.
collecting premium on that. So we will see. We don't have any preconceptions as to what 2026 will give us. You know, we have some thoughts about what might happen in the next week or so, but after that, all bets are off, and it
All
could be an
bets are
amazing
off.
year.
So when we get back in 2026, we'll, see where things are at and what it looks like and kind of give you the assessment for, the beginning of the year there. But for me, just some parting things. I'm trading short term right now, no more than 3 to 4 weeks out at the most. Um, just because I think that's where the opportunities are longer term. Too uncertain to know, especially like I said, watch for the weekly and the monthly to get exhausted together. That is a key sign to be defensive, risk off, and that's okay. You can make all the money you want to make in a year from 1 or 2 trades if you do it right. So I would rather, get those opportunities when they come. And I think we'll have a big one in the first or second quarter. So, yep.
Okay.
Have a great holiday and New Year, guys.
Yeah, we'll see you guys on the first Monday in January. Thanks, everybody.